afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Wednesday, the 23rd of November, and we have James Whelan, Investment Manager, Head of the VFS Group Global Macro Fund, coming out of Sydney. James, welcome to the show.
Brian, how are you now?
Good, thanks, James. Now, what we're going to do is we're going to take a look at the numbers from across the region as well as crypto markets, and then we'll come back to you. We're going to start with Bitcoin. We're at 16,504. It's up 4.19%. Ethereum is at 1,162.87. It's up 5.36%. Now, looking across the regional stock markets, we start with the SGX in Singapore. It's down 0.21%. Bursa Malaysia in Malaysia is down 0.09%. Shanghai is down 0.1%. The ASX All Ordinaries is up 0.54%. The Nikkei is up 0.61%. The Hang Seng is up 0.55%. And rounding up the numbers, we've got the Kospi, which is up 0.41%. James, your view on market performance in the first half of the day?
It seems to be fairly robust with everything except for China at the moment. Bit of a sort of a mixed bag that we're having at the moment. We've come off a pretty a stellar day from the US overnight. Retailers seem to be okay. The view is that inflation not as bad, therefore the Fed not going to be as aggressive on rate hikes. But at the same time, we've got our friends across the ditch over in New Zealand who are saying exactly the opposite of that. So bit of a push pull. Currently, we're winning with off the back of that great US market of the great US session overnight. Looks like things are looking pretty rosy, except
okay.
The one
I want to
thing
give context in terms of. Sorry,
go
ahead, James.
There's just that one thing that's overhanging. You go.
Yeah, sorry.
I always talk too much. Go on.
I want to give context in terms of our audience, in terms of New Zealand. Now, New Zealand just raised rates. 75 basis point hike. That's the largest ever in its history. And that's a big dichotomy from the caution that the Reserve Bank of Australia has taken in terms of its rate hikes. What's your view on that, James? And how is that impacting currencies?
I think it's straight up. Obviously, the Aussie dollar keeps on coming off against the New Zealand of the Kiwi, and off the back of their 75-point rate hike. They did say that they were considering 100 points as well. We're seeing, and that they're going to see that inflation is going to be worse and that unemployment is going to be worse. They're seeing that 2023, potentially they're going to have a recession. They think it'll be long, but they think it'll be shallow as well. So it's not going to be so deep. So interesting views there. Yeah, it does conflict with what the RBA is saying, but I think that the main point is that they're not the same country. People are sort of trying to take some sort of a leaf out of what it is that the Bank of New Zealand is saying. It's a completely different country with a completely different set of circumstances over there. Here, a lot different. We've got more of a mining industry off the back of the Chinese demand for metals. Agriculture, obviously agriculture is the same sort of thing, but we've got this housing leverage that we have here as well. Aggressive rate rises really would destroy the economy and leave a lot of people literally impoverished. And I think that the RBA know that that's what they're looking into. So two completely separate countries and to be taken completely differently. So the RBA's, I think they're just taking a bit more of a cautious approach when it comes to the rate hikes.
Now, I want to take a look now at some numbers that come out of Singapore today. Now, Singapore revised its growth forecast for 2022 down to 0.5%, a range of 0.5% to 2.5%, and also narrowed its 2022 forecast to around 3.5%. What signals is that giving investors out there?
It's sort of like I was saying, where the market's got all these different messages that are singing out at the same time. We've got the US who are saying that inflation's going to be down, retail is fine, and then you've got something out of Singapore that's saying that's got weakening demand and to slash the growth outlook for next year from 3.5 down to that range of 0.5 to 2.5% growth. That's pretty significant. The answer is we don't actually. Yeah, there is no answer yet, Brian, on this one. It's only time will actually tell about who is correct on these particular things. Singapore is driven by a whole bunch of different things, though. Not enough time here to go into exactly what they are, and I'll probably get lost anyway. You're a little bit closer to the edge of that sword over there. But sorry, what were you going to say?
I was actually, because I think one of the key things that Singapore often is a bellwether because it's a trading economy. So if you look at all the charts from the past over the last 20 years, they're often the first to go into a recession and literally the canary in the coal mine, but they're also often the first ones to come out of a recession. So I tend to look at the Singapore numbers fairly closely as a canary in the coal mine.
Yeah, and I think that you could be accurate on that one. It also, keep in mind too that there's a difference between the US and Singapore is obviously a little bit more leveraged to what's going on in this part of the world. But here's the kicker is the number of people that are starting to look at the China reopening now as being postponed a lot longer than what was originally estimated after the Chinese Communist Party Congress that just happened a few weeks ago. The expectation originally was saying that maybe that they'd start about reopening about now. COVID zero was potentially going to be something that was unwound back. We have seen that has not taken place. All the rumors of a few weeks ago, all now sort of behind us as we see now. I think that I saw a stat thrown around, Brian, that maybe 1/5 of China's GDP is currently under lockdown. I don't know where they pulled that stat from, but it sounds exciting, so I thought I'd say it. But yeah, I think about 48 cities currently looking at a lockdown in China, and that's significant. That's where those Singaporean outlook numbers are probably going to start coming from, and maybe a lot of the things around the region are going to be related to that as well.
Yeah,
currently, though.
Sorry, go ahead.
No, you go.
No,
we're going to get there one day, mate. It's going to be okay.
Today we're just not in sync. But one of the key things is Australia is so heavily dependent on China in terms of mining, in particular. That's going to have a significant trailing impact on Australia moving forward.
Yeah, absolutely. However, you look at BHP today, and BHP is up today. That's the bellwether. It's copper and iron ore. That's basically the Chinese story. So if BHP is up today, then you can sort of see that traders and investors are thinking, okay, it's the Chinese situation maybe isn't so bad. We're also looking at stockpiles as well. The idea that copper is still going to be in high demand going into 2023 too. Here's the other kicker that's going into it, Brian, that you've got to remember is that any pullback in something like, say, oil is actually going to be so oil comes off. I'm going to run myself into a circle here, so just stand back. All right, this is going to happen. Oil comes off because of a global demand outlook maybe as shrinking. People think that maybe there's going to be a retraction in the economy. So oil price comes off. If oil price comes off, then that's actually going to bring back inflationary pressures. And inflationary pressures come back, which is actually a buying opportunity for the market because we think that maybe rate hikes aren't going to be too hawkish, which then sort of, if rate hikes aren't too hawkish, then we see that global growth can actually pick back up. And that's the expectation. You can sort of see how the dog chasing its tail at the moment means that the market's pushing it against itself. I can't believe I managed to get all that in order correctly. That's the best way that I've possibly got to see it. You can sort of see where the confusion sort of sets in. Different story in Singapore, different story in New Zealand, Australia, China, and in the US. Don't even start me on Europe. That's a whole different story.
Now, James, I want to move to something else. Worries about contagion in the crypto market, particularly with the FTX, obviously now well and truly on its way to being wound down. But there's a lot more contagion risk happening right now. Tell us about that.
Yeah, some rumors around the market about, and I don't want to mention what they are, but certain exchanges, funds that actually allegedly hold coins that maybe they're being asked to show exactly what sort of reserves they have on hand. Do they actually have the coin that they say that they do? Quite frankly, I don't think that they do, and I think they're about to get shown up as if they don't. Sort of looking at things, not that I advise or anyone really advises on crypto at this space, but I think that the contagion is just going to be that if you've got a multi-asset fund that holds a certain amount of crypto, maybe the liquidation event that happens with them could actually spread to other parts of the market. The chance is slim. The fact that we haven't really seen it by now means that it probably won't happen, but it just needs to be paid attention to. If anyone's out there in the crypto space, I do believe that altcoins, so external to Bitcoin, they're probably not want to be placed at the moment from an investment point of view. I think that Bitcoin probably is going to be seen as the only haven. Any liquidation events in Bitcoin should probably be grabbed hold of because there will be some flow into that space.
Now, James, on that note, thank you very much for your insights. Thanks for coming on the show.
No problem at all. Have yourself a great day.
Now, we've been speaking to James Whelan, investment manager and head of the VFS Group Global Macro Fund on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez, and this show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.